This single setup gave me 3% in less than 10 minutes last week. And in this video, I'm going to walk you through exactly how I found it step by step, so you can start spotting the same type of moves in the markets every single day. We'll start simple with the basic supply and demand structure, and then we'll start working through the deeper details. The kind of small confluences that are going to separate a random setup from a high probability one. So first, let's start from the beginning. So to find our valid demand zone, what I'm looking for is a clear bearish candle followed by a strong and impulsive bullish move. This is going to tell me that buyers were sitting heavy in this area and institutions were likely filling orders before pushing price higher. As you can see, there is a lot of volume coming out from there. So I'm going to mark out that bearish candle right before that bullish move. And that's going to be our first step, the zone. It's clear that something major has caused this movement before, that being a great price for the market movers. So when price returns to here, the investors will still be eyeing up this area to get a better entry. Or for the banks and investors that missed this original move, they'll be getting their original entry. Just remember that these investors are so much more patient than most retail traders. They are going to wait for this better price because the difference of how many pips? 12 pips could be the difference between tens of millions to them. But I'm not just going to enter because there's a zone. I'm going to want liquidity in front of it. So what I'm going to do is wait for a small retracement that doesn't actually touch our zone, and then for that swing to break its own high, just like that. This is going to tell me that liquidity has built up below this low. So when we come back down to our zone, price is going to sweep that liquidity before we actually touch our demand, giving us a beautiful combination of both supply and demand and liquidity. Now we're starting to stack confluences, and we already have three of the biggest market movers behind us, those being liquidity, supply and demand, and just general market structure. Most retail traders are going to dumb this down to, support and resistance, but when you actually dig deeper, there is so much more going on. We're not just buying and selling at random levels. We are aligning ourselves with the people that actually move the market. Quick little side note, we want this high to be broken so we can see that we are still going in the bullish direction. If we failed to break this high, then market structure would just be showing some bearish intent, since we would make a lower high and then break and make a lower low. Since we are breaking this high, we are showing that we want to continue to the upside. Once again, just confirming market structure that little bit more. Alright, that's going to be the beginner logic out of the way. Now let's dig a little bit deeper. In terms of market structure, it really is quite textbook. On the 5-minute time frame, we are so obviously uptrending, and that's more or less the only time frame that we actually need to concern ourselves with. The fact we are going from the bottom left of my screen all the way up to the top right is just going to be a clear indication that we are going upwards. Now if we look a little bit further to the left, we can see a huge bearish move. Now we don't know why this happened, but what we do know is that this is going to want to be filled, since there is a lot of fair value gaps or imbalances sitting inside of these candles. Now if price came up and reacted from the top of this swing after filling in all of those gaps, then honestly anything could have happened. But if you go forward a few more candles, we can see that this high before us was easily broken, and we can see that this was so clearly and intentionally broken since there were candle closes above this high. And the fact that we broke this high so intentionally is just going to confirm market structure and prove that we are still going to keep going upwards after all of this retracement. We're not reacting from any key areas. Now if I was to actually grade this zone, I'd have to mention that the fact that the zone being part of the structure to the upside isn't technically ideal, but if you were to wait for absolutely everything to line up, then we would probably be getting 5 trades a year. So as far as I'm concerned, this is an A+ trade to me. But if you're being really picky, then you could just call it an A. Now, there's going to be a big difference between over-analyzing and just seeing the bigger picture. I'm not overthinking every single detail in real time on the 5-minute or looking at any other time frames, since we are in and out of our trades quicker than any higher time frame candle is concerned. I go through market structure much more in depth, so key areas, retracements, and more, much deeper over in the VIP Discord down below, which is completely free for you to join today if that's something that interests you, if you're looking to learn this strategy through and through. Anyways, at this point, I've got more than enough confluence to enter. We have our demand zone, current market structure so heavily in our favor, a strong level of liquidity to grab before we come back down to our zone, as well as breaking the previous day's high, aka the top of this retracement. And for my next quick mention, I'm going to be talking about fake outs from a demand above us. I'm not going to be talking about this for too long, since it's just going to be an extra little confluence that I like to see, and it's just going to be making this level of liquidity liquidity that much stronger. I'm also going to be going over it quite quickly because I've talked about it a lot in previous videos, as well as tailored videos over in the Discord. But essentially, a fake out from a zone above us is great to see, not because it's anything that we want to get in on. A fake out from a zone above us is great to see for one main reason. People trading normal supply and demands are going to be putting their stop losses below this swing, which is, as I was saying, just going to be adding to our existing level of liquidity. We don't look at this zone as something that we want to enter, since it isn't valid for us, but it is valid for a lot of people of which are going to be getting stopped out before we come back down to our zone, which is really unfortunate for them, but is going to be a great confluence for us. So when price finally touches my zone, how do I actually enter? So for demand setups, I'm usually waiting for the first bullish close after we actually touch our zone, which is going to be the first sign that buyers are stepping in, but timing matters too. In this case, entry would have fallen just before a new 30-minute candle. Now, because of this, I expect a bearish wick to form first before we continue our bullish move to the upside. We can expect most higher time frame candles to have both a bottom wick and a top wick. So us on the lower time frames, such as the 5-minute, are going to try and take this into account. So instead of rushing in, I waited for that flip, which is going to be another one of our entry models, which is essentially the bottom wick being formed on a new higher time frame candle, and then we flip from bearish to bullish. I waited for that bottom wick, got a tighter entry just at the flip, which pretty much just leads to better risk to reward ratios. Now yes, it is still technically going to be riskier when compared to just waiting for another directional close, but since we wicked even deeper into zone and got once again just another great rejection, I can take this with full confidence. And this trade played out absolutely perfectly. In 2 candles, the 1 to 3 was hit. Now this risk to reward is going to be according to the optional TP rules over in my Discord that I have laid out for every single pair, with different pip sizes to account for each pair's volatility, which is essentially tested over years and years of my backtesting, which is tested to be the safest and still yield the highest profit gain over the long term, which is what we're doing it for. And just like that, that is the 3% gain from the week. And honestly, anyone else in the VIP Discord also caught this. It was just way too clean to pass up on. You could have technically aimed for a 1 to 20 or a 1 to 30 if you really wanted to. As you can see from all of these kind of retracement swings, none of them actually come low enough to stop us out, so it is totally viable. It's nothing that I'm going to personally preach, but I'm just saying it to essentially show you that we are using everything that the market wants to see before continuing in its intended direction. We've given it valid liquidity to take, we're moving with the current market structure anyway, and giving the people that are going to start it all off a great price to get in on. And that's why this strategy works so well. It's not just random lines and boxes, it's understanding how demands, liquidity, and market structure work together every single day. So yeah, that was easily the trade of the week. It's only one setup, but it paid massively. Anyways, if you found this useful, make sure you stick around and let me know if breaking down a trade entirely is something that you want to see again. I have more than enough examples over in the Discord that I can go through, and if you want to be there to see the next one play out live, then make sure you join up. Or you can just stay tuned here for all of the same free information. I appreciate you for watching, and I'll see you in the next one. Peace.